Welcome to Daily Tax Savings. This is Tony Novak here to share a few points on saving taxes and staying out of tax trouble. Today's topic is LLC operating agreements. And of course, we never seem to run out of interesting, nuanced points to talk about LLCs. Now, today I was working with a newly formed company. The LLC is formed. They were using the word incorporated. You don't incorporate an LLC, you organize an LLC, and you might file a business registration, but you don't incorporate an LLC. But in any event, their LLC is formed, and they thought they would need to execute two different power of attorneys to accomplish two different things. And I suggested it would be easy to accomplish those things in the LLC operating agreement and then just share a copy of that agreement with the people that needed to know. I was one of them because I'm doing some work for the company and I needed to have authorization to do that. In this case, there were two things. And so some of the useful things that an LLC operating agreement can do for a new company, one is designate the tax matters partner, who is usually the person who's talking with the outside accountant. Or if there's an attorney involved or someone else involved, it can designate who's authorized to do what on behalf of the new company. Another thing that an LLC can do is particularly a small company, in this case, just two partners. One of the partners, I believe, is not fluent in English, so wants to designate her spouse to be the person that communicates on all business issues. Makes perfect sense for a U.S.-based business. So both of those things can be accomplished in an operating agreement without having to put together two separate power of attorneys. A third and common use of an LLC operating agreement is to set the stage to save taxes later. And I think in an earlier episode, I used an example of a case where the business was overwhelmingly 99%, 1% owner. There was a very established old senior person that controlled essentially the entire business, but had a young person, I think it was a stepchild in this case, that was doing some of the grunt work. And when the business earned its first few dollars the first year, the larger share partner didn't need the income, but the younger, lower income person definitely needed. And in addition, because their income was much lower, essentially that became not subject to income tax. It is, of course, earned income for self-employment taxes, but in this case, not for income taxes. That's a big difference, a big savings as compared to if they had split the income any other way. So they could allocate it to one person, and the operating agreement can say that the person doing the work, the grunt work, the setup work in the first year is going to be entitled to the first X dollars of earned income. That's another common thing. Let me just wrap up by saying an LLC operating agreement is not required by law. However, if you're going to go for bank financing, SBA financing, or any type of grant program, then they will ask for it and they'll act like it's required. So I would say might as well do it with online tools and AI-assisted tools out there. It's easy to create one. I used to keep a library for my own use of agreements that could be adopted, but nowadays it's just easier just to go and ask ChatGPT. We'd love to hear your thoughts, comments, or feedback on this topic. If you have a LLC without an operating agreement, I would say this is a good thing to talk about. If you want to reach me one-on-one, that's easy to do. Find me at taxproblems.cpa and schedule an appointment with the Let's Talk button. I'll be back tomorrow with